Hello, hello, hello. Thank you so much for joining me today. My name is Cassandra, aka Daily Wealth Ninja, and I just wanted to thank you so much today for taking the time out of your day to check this out. I am learning learning Forex, and I just wanted to share with you what I'm learning, and it's just been an amazing journey. I've met so many amazing people and so many professional Forex traders who are now able to live the lifestyle that they dream of and just do things that most people would never dream possible. Now, obviously, results aren't typical and do not guarantee your success. Please be sure to speak with a financial advisor before taking anything that I say, because I am not a licensed financial advisor. I am only here to help share what it is that I'm learning on my journey. Now, let me go ahead and make sure that you can hear me on my profile before I get started, and you might not hear me. Okay, perfect. So as I said today, in my with my team, there was a heated discussion about pips. Now, what exactly are pips? Pips are basically the things that you are looking for when you're trading currencies in the foreign exchange or Forex. So how exactly does that work? It's when you are buying or selling currency pairs, such as the USD CAD or the United States dollar, Canadian dollar, right? You might find other ones, just they're all over the world. And it's when you are buying or selling those currency pairs. And what happens is when they are, let me go ahead and do the text here. So let's say that you are doing a buy. Let me make that a little bit bigger. Oops, here we go. There we go. All right, so let's say that you're doing a buy of USD CAD, and the current price is 1.10312. I don't know, it's some number, right? And you expect to be able to take profit, which means that you're going to close your trade at a certain level, and you think it's going to go up, let's say, 50 pips. So 1.10812. Because the way that that works is that in most currencies, the fourth pip is going to, excuse me, the fourth digit is going to be your pip. So you would count up from here 50 pips, which is why it's going to be 81. Now, in every trade, you should have a proper stop loss. Again, this is based off of your account size. This is based off your trading style. This is based off the things that work best for you in your current situation. Again, please speak with a licensed financial advisor for more information. So let's say that you make this trade and the stop loss, you expect it to be a 20 pip stop loss. So that's going to be 1.10, oops, 1.10112, because that is 20 pips less, right, than that. So as a visual cue here, let's go to erase. Oh, that's not quite what I thought that would be. Rectangle. Let's go ahead and get rid of this. Get rid of that. All right. So let's say, that's not what I wanted either. There we go. So let's say again that you see this wave here of let's just do it one more. All right. So you have a lower low. That might not quite have been quite right. Hold on. And this is called an Elliott Wave. So it's got 1, 2, 3, 4, 5. So from going this direction, which would be a downward trend, you have a lower low from here, right? And a lower low from there, a lower high, and at some point you'd also have a lower high here. So we can see that that's going to be a downtrend. Now let's say that we did get in here, right, based off of this trade here. So we would have it's not quite a higher high yet, but it is a higher low. And then here's a higher high and a higher low, right? So we know that it's going into an uptrend. So let's say that we see that we're going in an uptrend on this USD CAD. And let's say we're right here. So the current price would be that 1.10312. 1, 2, and we expect it to go higher based off of what other trade signals that we have found. Well, here's what I've learned. So as I said in my description, I had a very heated discussion with my team about pips. Now, with Forex, pips, I would not say that they are everything. Yes, they are required in order to create additional income. Again, results not typical and past results do not guarantee your success. But the number of pips, right? The number of pips determines your success or your failure, right? Because if you make an educated guess that it's going to go up and the stocks actually go down, you're going to hit your stop loss. If you expect it to go up and it goes up, then you're going to hit your take profit, and vice versa, right? Again, it depends on your educated guess, where the stocks are going, etc., etc. So the number of pips are going to determine your success or failure, as well as the direction. Now, as with all trading, whether it's stocks or Forex, you must understand your risk management. Now, what exactly is that? You might hear people saying that in every trade, you should have, let's say, 5%, right? Now, if you have in every trade 5% of the account that you have, right, that means that you're risking 5% every trade. Well, what if you lost 10 trades in a row? That means that you would have lost 50%, actually less than 50%, but pretty high up, 50% of your account. Now, that is super, super risky, and that's why it's so important that you need to understand risk management, have a trading plan, and make sure that you follow it, because you don't want to get yourself out. You want to make sure that you are following the rules of not necessarily compound interest, but the compound effect, right? You want to make sure that you are using proper risk management so that you're not getting yourself out of trades before you're ready and things like that. So why is it that I just had this discussion with my team about number of pips not being everything, the be all end all? Well, here's why. Let's say that let's say that you had a trade. I'm going to do it on two different sides here. So as a master Forex trader that I am following and learning from, let's say that you're using the old paradigm versus, you know what, let's do it this way. Text, yada, yada. So old paradigm versus the new paradigm, right? So what happens here is, let's say that we'll use this gray, start with the brushes. So again, we're here on, let's just say it's right here, right? So it's a little bit not drawn to scale, but let's just say that we're here. So at this gray line, we have that 1.10312, and it's also there at that line. All right, so let's say that we're basing it off of this original numbers here, right, with a 50 pip, 20 pip stop loss and a 50% take profit, or excuse me, 50 pip take profit. Well, let's look at this. So if we had a stop loss of 20 pips, and based off of your lot size, which is the amount that you're putting into each trade, let's say that this 20 pips was 2% of your account. Now, maybe you're using a standard lot of 1.0 size, maybe you're using a standard lot of, I'm sorry, not a standard lot, a mini lot of 0.1 or even a micro lot of 0.01. Again, these are just the base numbers. These are not, whatever it is that you choose, you have to base it off of your account size. And if you're looking for a calculator for this, the mentor and trainer that I'm talking about has one, but it's only for the people who are a part of our educational platform. So if you want more information, please do reach out. So let's say that whatever size that you chose is 2%, but based off of what you're doing, it's 20 pips for your stop loss, right? And so in order to make back that 2%, right, or not make back, but get return on your investment. So let's say for, oops, that's horrible. There we go. So you would have to make 20 pips here, and 20 pips here to get an additional 2% per item here. Now this could be 50, this could be 100, whatever the case may be, but I'm just using 20 pips for now to show you what I'm talking about. Well, let's say that you learned something pretty nifty from this mentor and trainer that I've been talking about, and he talks about how you are able to use, let's say, a 5 pip stop loss, okay? 5 pip stop loss. And it's still 2% of your account. All right, so this is a 4 times difference, okay? I want you to keep that in mind. So for the same amount of investment between the old paradigm and the new paradigm, right, between the old paradigm and the new paradigm, to gain 2% in your account, can anybody guess what that might be? Right, so if you wanted to gain 2% in your account, based off of, again, that lot size and your account size, if you had a 5 pip stop loss and that was representative of 2%, then you'd only need to gain 5 pips, right? So this is 40 pips. Let's say that this trade did 40 pips, okay? 5, 10, 15, 20, 25, 30, 35, 40. Okay, so to gain 2%, again, based off of your size of your trade, then you'd only need to gain 5 pips, and another 5 pips for another 2%, another 5 pips for another 2%. And so for the same trade, where you were risking 2% of your account, you had a tighter stop loss over here than you did over here, right? Even if you both got in the same trade, the new paradigm, you would have gained 16% of your account versus just a mere 4% over here. Now, I know that I'm a green and that these numbers just make sense to me. So if this doesn't make sense to you, that's okay. That's why it's so important for you to grow your own knowledge and your own education in this new, not new, but this skill. Right? Because what happens is when you learn how to trade Forex, again, nothing is guaranteed. Past results do not dictate or guarantee your future success. I'm simply sharing with you what a master Forex trader has taught me from his 12 plus years, right? I actually don't even quite know how long, but I know in the videos that I've been watching, he's mentioned 12 plus years of his own mastery. And he's shown that with the same trade, right? This trade up here, come on, where's that mouse? There it is. So with the same trade, starting at that price for this particular currency pair, if you understand how it works and you understand how to get this, you can make 2 times more, 4 times more. It all depends on how you've positioned yourself in your trade and if you understand risk management. So this is why I say that pips are not the be all end all. You have to understand certain things about Forex and how to trade in order to make sure that you are getting the most for your investment, that you're getting the most out of your time, and that you're just making sure that you are following the rules, as it were, of Forex. Now, again, obviously, nothing is guaranteed here. I am simply sharing with you information that I've learned from a master Forex trader who has been able to create his lifestyle without having to work for anybody else. He's able to do, he can do this from his phone, right? Now, results aren't typical, but if he can do it, you can too. And so if this is something that is interesting to you, if you'd like to learn more information, please do reach out, send me a message. I'd love to share with you what it is that I'm using to build this skill set and what I am able to cultivate for my own trading education and trading skills. So again, send me a message if you want more information. Otherwise, I'm going to hop on off so I can learn some more Forex, and I hope you have a wonderful and prosperous rest of your day.